The economic effects of a war a continent away certainly being felt in the United States. With consumer goods and gas prices reaching near record highs before the invasion, now the Russian action making that reality worse. The Biden administration clear to blame the offensive in Ukraine for the spike in gas and oil prices.
The reason why we are seeing volatility in the global oil markets, the reason why the price of gas is going up, is not because of steps the president has taken. They are because President Putin is invading Ukraine, and that is creating a great deal of instability in the global marketplace.
Financial experts agree.
Because the energy market is a global market, that's pushing up energy prices, and it's pushing up energy prices, everywhere. Because now, as that supply comes off.
Carl Gardner is with Bitterroot Capital Advisors in Bozeman, Montana. He says that even though Russia's economy is not significant in the U.S., it is about the ripple effect from a Russia-reliant Europe.
It's a small GDP with respect to the entire global economy, but they're a vital supplier of energy, in particular to Western Europe. They provide 40% of Western Europe's natural gas.
Adding to this is the fact that American consumers are typically spooked by global unrest as well as pre-Ukraine invasion inflation here.
The primary cause of fear is the inflation. I mean, last year inflation was at 7.2%, the highest we've seen in 40 years. Wages have not kept up, so all things being equal, living standards are declining. Right?
University of New Orleans economics professor Gregory Price emphasizes that the prices we are seeing now on consumer goods and petroleum are based on futures markets. Russia is the world's largest exporter of wheat. Wheat prices surged this week to their highest level in 14 years. Russia exports a third of the world's palladium, vital in microchip production for cars and tech and cell phones. Prices on these commodities increasing lead to a rise in final product prices and affect the markets, with the Dow down over 1% over the last week and the NASDAQ down nearly 3%. Professor Price says that futures prices take the best temperature of situations like war, and those temperatures are high.
They react to what John Maynard Keynes would call animal spirits. They expect the worst, and those future prices show up in current spot market prices.
Those actual future prices play into how Americans spend their money and think about their own immediate futures.
And then you have expectations, and then all of a sudden people start to anticipate inflation, and they start to build it into their plans, and it becomes a self-fulfilling prophecy.
The word to be underscored here, Rudabeh, is uncertainty, and now you have the Fed that said they were going to be raising interest rates this month. What could that do to stifle inflation? It could increase recession. It could bring what's called stagflation for the first time since the 1970s. Rudabeh?
Thanks for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.